Hey guys, it's Nick. Welcome back to another video. Today we're going to talk about how you can pay down your mortgage sooner. These are some tips that you can use in addition to obviously paying extra down. This will help eliminate that debt as soon as it possibly can be gone. So if you want to be debt free, you're going to want to check this one out. All right, so mortgage debt. This is one of the most common debts on the planet. And for most, if not every single homeowner, it's the dream to have a mortgage-free home and to just really live the life that you want to live. So removing the mortgage stress for a lot of people is going to change the way that you live. So the things that we're going to talk about today are tips that you can use in addition to paying extra down off the mortgage. Because I mean, ultimately, to get rid of any debt, you got to pay it down, and to get rid of it quicker, pay more of it down sooner so it's gone. But these are some things you can use in addition to that that will help get rid of the debt sooner. Okay, so tip number one I have for you to pay down your mortgage sooner and get debt free is to not fix the mortgage or don't have an interest only loan. You see, when it comes to fixing mortgages, the best way to explain this is like going to a casino. All the casino games, they're there to make money for the casino, right? At the end of the day, the house always wins. And it's a similar concept when you're talking about fixed rate mortgages, because you're basically betting with the bank that the rate is going to rise. Now, if you fix your mortgage and the rate rises, you win. If you fix the mortgage and the rates drop, the bank wins. Now, 9 times out of 10, most times the bank is always going to win this bet. I mean, the banks are constantly trawling through data to see where the economy is headed. And if the rates do rise on that odd occasion, then you will win. But this is no good way to pay down your mortgage sooner, because by having a fixed rate, it's a fixed payment for a set period of time, and it's very strict in terms of the flexibility that you can have in paying down the debt. There's no offset. You're restricted in how much you can pay back at any one particular time. It's just really not a good way to pay down your mortgage sooner. And at the end of the day, the bank is generally going to always win that bet. And then when we're talking about interest-only loans, I mean, it's pretty obvious you're only paying the interest portion of the loan. Now, yes, it looks great because your mortgage repayments are going to be a lot lower, but it's a lot lower because you're only paying the interest portion down. The principal is still sitting there. So if you're looking to pay down your mortgage sooner and get rid of that debt, interest-only loans are definitely not something that you want to be doing. Tip number 2 for paying down your mortgage sooner and being debt-free is consolidate all of your unsecured debts. So by unsecured debts, I'm talking about your credit card, personal loan, all of those things you want to actually consolidate. Like if you've got all of these debts outstanding, you want to consolidate it into one loan, preferably all under that mortgage. There are a couple of reasons. Number one, it's just easier for you to manage and keep track of and make sure that you're paying everything on time. And two, if you consolidate unsecured debt into your mortgage, guaranteed the interest rate is almost always going to be significantly lower than a credit card or than a personal loan or a car loan. So consolidate your unsecured debts into your mortgage, and then that way you'll be able to hammer down the debt a lot sooner, and you're going to save yourself a ton of interest and possibly fees as well by having all of the debts in one loan. So tip number 3 for paying down your mortgage sooner, and this is a really important one, but this is checking your interest rate at least every 6 months. What happens is when you have a standard variable rate with the banks, if you don't check it and you don't stay on top of what's happening out there in the market, you're going to have the rate slowly start to creep up from time to time. So it's really important that you check in with what you're currently paying on your home loan, but then also check out what is out there in the market. Now, if you find something that's better out there, that doesn't mean you need to refinance and move your mortgage straight away. But what you should do is pick up the phone, speak to your bank, and see if they can at least match or beat the rates that you've seen out there in the market. And then if they can't, that's when you want to look at refinancing and moving your money elsewhere. But it's really important to check in. I would recommend at least every 6 months, check what your interest rate is and see if you can get a better deal or convince your bank to give you the best deal that they can. Tip number 4 for paying down your mortgage sooner, and this is a 100% offset account. Now, with standard variable rate loans, generally speaking, especially here in Australia, most lenders would have a 100% offset account attached. Now, if you don't know what a 100% offset account is, it's quite simply just a transaction account linked to your loan, and whatever money is in that transaction account will offset interest payable on the mortgage. So for example, if you have a $500,000 mortgage and you've got $50,000 sitting in that offset account, you're only going to be paying interest on the mortgage for $450,000 because of that 50K is offsetting that interest payable. So it's a great way of saving money, but also having that security of having your cash on hand at any time. So a tip for using offset accounts is, yes, you might not have savings or large chunks of cash that you can put into these accounts. So what you can do is you can get your salary transferred into the offset account, which is just a transaction account. And any money that's in there in any point in time is going to offset interest payable on the mortgage. You've got to remember that banks calculate interest daily and they charge it to you monthly. So even if you have your salary in there for a couple of days every single month, over the period that you have the loan, you're going to save yourself a significant amount of cash. So it's in your best interest to utilize that offset as best you can. Even if you don't have a ton of cash in there, any money is going to be saving you interest on the mortgage. So use offsets to your advantage regardless of how much money you have in there. So tip number 5 for paying down your mortgage sooner is increase the repayment frequency. See, a lot of people and a lot of banks set up direct debits to pay their mortgage monthly from their transaction accounts. So if you were to pay that fortnightly, by the end of the year, you're actually making the equivalent of a whole extra month's repayments because there's 26 fortnights in the year. There's obviously 12 months in the year. So when you work it out over a 12-month period, by paying it fortnightly, you're actually paying more off in that time. And obviously, the more frequent you pay it, the less interest you're going to be paying because the balance is going to be continually lower than if you were paying it monthly. So if you have your payments set up monthly, I'd suggest moving it to fortnightly or even weekly and reduce the interest that you're paying on your mortgage. All right, so those are some tips on how you can pay down your mortgage sooner. In addition to making extra and more frequent payments, these tips are going to be saving you interest, which over the long run, saving you money and reducing the time that you have your mortgage. Now, the best way to pay down your mortgage faster, as I've said a few times now, is just pay more of the mortgage more often. So whatever you can do to reduce the debt, reduce the interest payable, and reduce the time that you have the loan is money that you're going to be saving in the long run. So use these tips in addition to paying more off, then you will be debt-free sooner and you can live the life that you really and truly want to live. So that's all we have time for today's video. I appreciate you watching and stopping by the channel. If you like what you saw throughout the video, drop me a like. It's the best thing you can do to help out the channel. And if you want to see more content just like this, I release a video once a week on personal finance and investing. Comes out Thursday, 7 p.m. Sydney time. Once again, thanks for watching. Until next week, take care. I'll catch you soon.